2 months after the Trump tariffs, the S&P 500, US stock market, top 500 companies hit all-time high at about 6.1, 6,173.07, right? And some of the stocks that really too busy to find stock ideas, check out Fire Pro to shortcut your research time and effort by 90%. 10% off link in the comments and description. Pushed it to those heights. Of course, you have Nvidia, Meta, Microsoft. You have a newer entrants like Palante that did well, Broadcom company that's linked to Malaysia. You can see a big spike up, right?
Yeah, and you also can see that some of these companies already are hitting at their all-time high levels as well. So that's why it rallied the S&P 500. And if you can see why they are going up is because of this leading indicator, which is Micron. So if you guys don't know who is Micron, basically they design and they manufacture those memory chips. So your DRAM, NAND, all those kind of things. And if you can see that their recent quarterlies, they actually beat their consensus expectation. So you can see that everything is a beat: revenue, gross profit, operating profit, and also their earnings. Everything is so far good. So when their business is doing well, obviously they are in a memory business. You can foresee that probably all those AI companies like Nvidia, Meta, just now we show you, they all will also be reporting also similar kind of like numbers in terms of the upcoming quarterlies. And also there's other positive news that actually contributed to this rally. So the first one is obviously the war has de-escalated already after the US dropped a bomb in the Iran's nuclear facility. And there's this Age also, one of the journalists or the columnist, he said that the nuclear Iran has been a threat, not just for Israel, but also there's multiple continents or regimes. So there's your Sunni regimes, the Middle East, and then there's nearby European and also eventually the US. So even the German chancellor, basically he said that Israel is basically doing the dirty work for everyone lah. Even China and Russia also don't dare to like rebuttal or don't dare to like give support to Iran, because they also somewhat indirectly agree that Iran having a nuclear is a bad thing. So that's why right now everything seems to be fine already for the war.
Yeah.
Second thing is that taco. So Trump always chicken out trade, and if you can see that every time he does like a threat for other countries, right? He said that he don't want to give extension already, or he wants to impose a higher tariff rate. In the end, when
he gives concessions,
he gives concessions, and then but in the end, then he will chicken out, or he will say that no, I'm just kidding, we go back to whatever terms.
And of course now we are seeing some of the other countries playing hardball. I think Japan recently cancelled a trip because they didn't agree on certain things. So it's not easy, right? As Trump is figuring out now to get individual trade deals done.
Correct.
And also, they're doing so many at once, right?
Yes, exactly. And also the market kind of like seen through everything what he has done so far. So this kind of like threat, I think the market is used to it, and they think that he's just going to go back to whatever he say lah. So that's why there's this taco which contributed to the rally of S&P 500. And then the next one, this I think is a more exciting one, which is the Fed rate cut. So I think the Fed say that they're going to be cutting about 25 to 50 basis points. So right now it's about 4.5%, right? It's going to drop down to around 4.25 to about 4%. But it's not coming soon. I mean, there is some speculation that they say he's going to cut around July, which is this coming month already. But then, they did some of like a meeting again. And basically the Fed say that they need more hard data. It's still not enough yet. That's why they still think that, maybe the second half, which is September, they'll foresee like a rate cut. And then also Trump came in and said that, he thinks that interest rate should be around like 1 to 2% level, which is quite funny. Okay, last
but of course the response for Joe Powell is like, well, if you want lower rates, you need to have lower tariffs.
Yeah.
So that's the thing he said. Very interesting.
And last but not least, we have over here, which is AI boom. So the expectation right now, it is that analysts thinks AI companies should be reporting double digits growth in terms of their earnings. So right now the expectation is about 12.1% on average.
Interesting how it actually dropped quite a bit, right?
Yeah, previously it's about 15.2, then now it's like 12.1, which is still quite high. I mean, it's still like a double digit, but in general, it's just like a very, very positive thing about the AI companies. However, the rally, didn't really account for these few things. So number one, it is that a potential tit for tat. Just now MJ mentioned about the Japan that is being hard on the trade deal. They also have the European Union, which is the EU. They also did say that they want to impose like a retaliatory tariff against the US. Of course, right now US also like kind of like giving them a high rate. And then Canada also.
Yeah,
they
recently
say,
he tweeted, right?
Yeah, he said no discussion with Canadians because they're too hard to deal with. So yeah, that's the potential risk.
That's
we
quite
have over
funny.
here.
Canadians being hard to deal with, you know.
Yeah, yeah. Usually they are the most kind.
Yeah, they're the chill people, right?
Yeah. And the second one, which is the rising inflation. Right now, the inflation rate is about 2%, hovering around that level. But there is like some economists, some of the experts also did say that, you know, the US inflation rate could be going up to about 4% because we haven't really seen the impact of the tariff rate yet. Right now, we are already imposing some sort of like a 10% tariff rate for all countries. But then, this coming July or potentially August, basically the reciprocal tariff will take into effect already. That there will be a finalized.
And also, if the rates come into play to reduce, that might cause inflation to go up as well.
Yes, correct. So yeah, basically everything is pointing towards somewhat like a high inflation, which is why Jerome Powell is being very cautious and he don't want to like cut rates so fast. And then the third risk we have over here, which is obviously earnings miss expectation, because there's a very high expectation with investors right now. They think that the AI companies can go up indefinitely. So what if they suddenly reported a missed quarter, right? I think that would create like some sort of like a domino effect where they start to like sell when they think that, you know, the outlook is bad, when let's say they reported one bad earnings for that one quarter. So this is also a very dangerous thing that a lot of people are not accounting for, which is companies reporting below expectation results. And finally, we have over here, which is more layoffs. I mean, because you can see that trade war also is kind of like a contributor to this. A lot of companies are right now doing a lot of cost-cutting measures, even in Malaysia as well. But globally, essentially with AI also, with automation and everything, more people are getting laid off. This is not just the only data. There's actually more. There's actually like Intel and other logistic companies that is being shared in this article, which is IntelliSense. Maybe the unemployment rate, we can foresee that it might have some sort of like a tiny spike up in the coming quarters when they announce those data. Okay, so our final thoughts is that I think...
this is something I shared with our members yesterday. One of the things we always look at is the yield curve inversion. And whenever it inverts, right, there's a 12 to 24 months recession that occur and a correction will happen as well. So what is very interesting is that the average month number of months it takes for a correction to happen after uninversion, meaning once the inversion finishes, is 3 to 4 months. Yet we are 9 months in.
Yeah, and no signs of a recession.
Correct. Now, does it mean that the theory is wrong? So far, no, because it has had almost 100% prediction rate. However, it's we don't really count the Trump tariff decline because it's not liquidity or economy related. It's just an announcement, basically. And equally important is that there are some scenarios, even though the average is 3 to 4 months, but there are some scenarios where it can go up to as high as 2 days. Right? It can take 2 days, 2 years before a correction happens, or the earliest is right after the inversion. So we are 9 months in, average is 3 to 4 months. Certainly, it is quite a rare occurrence for it to be 9 months in after the uninversion and you still don't see any correction.
Yeah. So this one, I think it's because the market has been so I mean, they already see all the bad stuff that is reported already. But so far, all the bad stuff is just like what MJ says, is related to just announcement, purely announcement only. It's not really like economic is going for a drought or something like that. We haven't really seen that yet. Who knows, maybe we'll see in the coming months or maybe even years, right? But anyhow, this one is something for you guys to watch out for when it starts to like show signs of like an increase in terms of the yield spread, especially once it goes up to like 0.6 to even 0.8. I think that will be a dangerous zone.
So because we can see when the recessions occur, right?
Yeah.
So apart from 2020, you can see recessions occur when it's 1 point something, 0 point something.
Yeah,
in this
0.9,
case, right? 0.6, 0 point, yeah, exactly.
Yep. So those are the key levels to watch out for a potential recession. Then the next is because there's a lot of people are buying into the market, because there's a lot of liquidity. I mean, if you look at our previous video, right, talk about the M2 supply, money supply in US is a lot. That's why you see that people are buying more passive assets. So your S&P 500 index, your VOO, all these kind of things, which increases the valuation for the stocks, the basket of stocks that is inside those indexes. So which also means that with higher valuation, people will be more demanding in terms of their earnings result or expectation. They will think that revenue will continue to grow and also the earnings will continue to grow. But if they fail to deliver these two key numbers, right, I think it will actually create a lot of panic in the market. And yeah, so just now we mentioned about going back to basics, which is you want to see whether the company is still growing their revenue and can they continue to reduce costs or not. So far, I mean, you see that there's a lot of layoffs at the moment, right? So which means there is some sort of like cost cutting kind of like measures. But the key thing that we need to watch out for is actually the revenue part. Because at the end of the day, right, we also need to see whether the consumer in the US is whether can they continue to spend more as compared to like last year or yesterday. So if they cannot spend or they don't have the consumption power to do that, then company sales also eventually will start to drop, and then they will also eventually will need to do some sort of like discount, which for them to like keep afloat lah. So that will be not
basically there's not a
sign.
lot of space, for room for error.
Yes.
Right now.
Yep. Correct. Yeah.
So it could be the case that the economy keeps chugging along. Just that the valuation now is a question mark.
Yes, exactly. So yeah, that is our final thoughts on today's video. And today, our June 2025 returns are out. So far, I think it dropped about 2%-ish for FirePro Malaysia. The FirePro Global one, that one has been doing pretty well. If you can remember, our previous return was around like 4%. Right now, it's about 6.2%. Boring portfolio, this unfortunately dropped down. But then I believe the boy portfolio right now is at a good shape because we did some sort of like kitchen sinking. We did like cut some companies we think that doesn't have good prospects. We added some that we think that has. And so far, I think we are quite happy with the boring portfolio. I think the same goes to the FirePro Malaysia also soon. And we're going to be adding more names very soon.
So if you're interested in knowing some of the names, you can hop on to our FirePro research program where we help you shortcut your research journey. And now it's a great time because market is quite muted, especially in Malaysia. So markets always move in cycles. Last year Malaysia was exciting. Now it's not so exciting. Unfortunately, last year a lot of people got into the stock market when it was you can say at the wrong time, especially in the second half. And for now, I think because it's so a bit of a people have no mood, so I think you can get a lot of companies for cheap. If you can get a taste of what some of these companies look like, check out our free sample, link in the comments and description. So guys, see you in the next video. Bye bye.